So we've gotten some clarification from Blackrock CEO Larry Fink. Not the news we were hoping for, however, there's still a silver lining to this. We're going to talk about that a little bit, and as well, we can just jump into other very exciting news. Again, coming out of this institutional interest in cryptocurrency. This is really good news here. Published July 17th, so we'll cover that. The CEO of Goldman Sachs is interested in Bitcoin and cryptocurrency. So we'll spend a lot of time talking about that, as well as Coinbase getting regulatory nod for security token trading. What's up, everyone? Today is Tuesday, July 17th, 2018. So we can start off kind of with the bad news, the only news that isn't super exciting in my opinion today. So yesterday we kind of covered BlackRock and their interest into cryptocurrency with their $6.3 trillion worth of assets. So this title here published, and I was hearing a little bit about this last night as well, but it's published on cryptovest.com, written by Peter Genoff 4 hours ago. So the BlackRock CEO denies crypto foray rumors, and this isn't necessarily a bad thing. So it says here BlackRock is not interested in cryptocurrencies. The CEO, Larry Fink, has claimed although the asset management giant is very excited about blockchain, no portion of its $6.3 trillion worth of assets has been invested into Bitcoin, Ethereum, Tether, or other altcoins. This was already known. Nobody had claimed or even thought so far that there was any of those assets invested into Bitcoin, just that they were interested in looking into it. According to a media report on Monday, BlackRock has formed a workforce to investigate potential users of cryptocurrencies. Multi-asset strategist Terry Simpson was said to have joined the team as an advisor on Bitcoin futures. However, later that day, Fink, the CEO, dismissed those rumors in an interview with Bloomberg Television. He's quoted here saying, "I don't believe any client sought out crypto exposure. I have not heard of one client who says that they need to be in this, meaning cryptocurrency," said Larry, the CEO. I have heard quite the opposite, actually, and if you go on social media as well, you can see a lot of this. There is a lot of growing interest in the crypto space. I believe Larry Fink does know this, and Fink did confirm that BlackRock was studying how cryptocurrencies perform, but he insisted the focus was on blockchain technology. As he told Bloomberg, the company was looking in that direction, especially in relation to Aladdin, BlackRock's electronic risk management system, which handles $15 trillion in assets. So it doesn't really get bigger than BlackRock. So that's why it was such big news. And what he's coming out and saying right now, I don't think that completely discounts them at all from cryptocurrency. I think they most likely are interested, even though the CEO is coming out and saying one thing. We've seen that before from the likes of Jamie Dimon and essentially every large financial player really in the space. So this doesn't convince me at all that they're not interested or will never be interested in cryptocurrency. He even did not entirely rule out possibility of BlackRock offering crypto services in the future as well. So it says when it becomes more legitimized, when it has a true open nature of it, that you can identify who the players are on both sides, that's when we'll probably look at it as an alternative to all currencies. So for the rest of the video, we're going to be talking about more good, positive news coming out of the space, even though that first piece I covered I don't think is necessarily bad at all. So the Goldman Sachs new CEO, David Solomon, is keen on Bitcoin and crypto. So Goldman Sachs is a huge player in the traditional financial space. So Billy Bambro is the contributor who posted this today, July 17th, 2018. It was published on Forbes.com. So this is the new CEO, David Solomon. So the article begins, "It's official, the new chief executive of Goldman Sachs will be the firm's current chief operating officer, David Solomon, who last month said the New York investment bank is looking into adding further Bitcoin and cryptocurrency services to its portfolio." According to Solomon, Goldman Sachs is already offering clients publicly traded derivatives tied to Bitcoin, but in an interview with Bloomberg, he said the bank must evolve its business and adapt to the environment. "We are clearing some futures around Bitcoin, talking about doing some other activities there, but it's going very cautiously," said Solomon. "We're listening to our clients and trying to help our clients as they're exploring those things too." So David Solomon is admitting there that he is listening to his clients as well as Goldman Sachs listening to their clients about exploring cryptocurrencies. It is, without a doubt, on the top of a lot of people's minds. People are interested in investing in it. People know there's money to be made there. Solomon will be taking over from the current Goldman CEO Lloyd Blankfein in October, bringing to an end Blankfein's 12 years at the head of the Wall Street giant. However, Blankfein has not been as dismissive as some on Wall Street about Bitcoin. While JP Morgan CEO Jamie Dimon famously shot down the cryptocurrency, labeling it a fraud as its price was spiking last year, Blankfein said he didn't want to dismiss it. So both the former and the new CEO of Goldman Sachs, both kind of in support of cryptocurrency and Bitcoin. but the new CEO that will be taking over in a few months is even more interested in it. I'm not in the school of saying because it's uncomfortable with me, because it's unfamiliar, Bitcoin adoption can't happen. That's too arrogant, Blankfein said. So Solomon does break the banker mold in other ways than an interest in Bitcoin. He's an electronic dance music DJ performing under the name DJ D Soul and has said employee diversity is a priority of his at Goldman. So just from reading this about this individual, David Solomon, it seems like he's open-minded. He's willing to give this a try. He's in tune with younger investors and people that are going to be entering the market in the next few years. And I think as a business person, that's exactly what you want to do. I think the focus should be on the youth, the younger people getting into the markets because they're the ones that are going to be taking over. They're the ones that this future is really for. And I think this individual sees that, and he wants to take advantage of that, and it will benefit not just him, but the younger generations as well as just other people investing. Then we have this article here published on CNBC.com that it's titled here, "More Institutional Money in the Crypto Space," says Coinbase Vice President. And again, this is going along with that theme of institutional money. It's something we've been covering for a few weeks now on the channel, but it's hard to ignore it. Really, if you type in crypto on Google, these are the type of articles that pop up. More and more interest in institutional money, more and more interest from institutional money is really creeping into the space, and it's something that's hard to ignore. It's extremely important in terms of getting the price back up there, which is a thing a lot of people want. But as well, even if I didn't want to cover it, this is some of the biggest news coming out of the space. So it's very necessary that I do talk about this. So this was published 14 hours ago by Kelly L. on CNBC.com. Some bullet points here that the Coinbase VP Adam White says there's increased interest among institutional investors in the cryptocurrency space. I think that goes without saying. Institutional conversations have become more and more profound over the past year, White says. The exchange announced it is considering adding 5 new tokens, and this is something that was announced a few days ago. So 0x, Cardano, and the 3 other coins here because of increased user demand. And what we're seeing, though, with institutions is that they want absolutely the right regulatory structure around cryptocurrency before they start offering and diving into the space. So the article begins, the institutional investments in cryptocurrency are helping to grow the industry, Coinbase Vice President and General Manager Adam White told CNBC. He's quoted here saying, "What's so unique about cryptocurrencies, and in many ways this asset class, is that it was driven by retail investors and not institutions. So it's surprising that his firm, a San Francisco-based digital currency exchange, has had unprecedented interest from institutional investors throughout 2017. And this is kind of a reflection on the entire space, in my opinion. I think people are extremely interested in this, and they are letting these institutions know, and that's why these institutional giants are coming out and really showing more and more interest towards cryptocurrency. So the institutional conversations have become more and more profound, White said. In his response, his firm has opened a New York office and launched new products and services. Last Friday, Coinbase, which also is the largest cryptocurrency exchange in the US, announced it is considering adding 5 coins to its platform, including Cardano, Basic Attention Token, Stellar Lumen, Zcash, and 0x. All 5 assets have moved higher after the announcement. The idea of adding new assets is very simply our customers want it, and that's why they plan on doing that. But so far, none of the coins have been approved, and it's not yet been determined if they are securities. The company said in a blog post on Friday that some of the assets may have limited functions and may only be available in some countries. The firm has previously been cautious about the addition of new tokens despite user demand, as the cryptocurrency universe endured increased regulatory scrutiny. Up until now, Coinbase has only listed 4 on its platform, 4 coins on its platform. We have a long-term vision for the space, White said, and we are focusing on building the exchange, the wallet, the custodian, Coinbase custody, that allows capital to move into this space. And then that leads me to the last article here, published by Anna Alexandra on Cointelegraph.com. Coinbase gets regulatory approval to list digital coins considered to be securities. So the cryptocurrency exchange and wallet service provider Coinbase has received approval from the U.S. Securities and Exchange Commission and the Financial Industry Regulatory Authority, FINRA, to list digital coins considered to be securities, Bloomberg reported on July 16, 2018. A Coinbase representative told Bloomberg that the SEC and FINRA have authorized the exchange to acquire security dealers Keystone Capital Corp., Venovate Marketplace Inc., and Digital Wealth LLC. The deal will allow Coinbase to extend its offerings with security tokens and operate as a broker-dealer, an alternative trading system, and a registered investment advisor. Coinbase initially announced the acquisition plans on June 6th. They did not reveal a timeline, however. As mentioned before, the 5 cryptocurrencies that they are exploring were listed there. As well, Coinbase announced in June that it will support Ethereum Classic and ERC20 tokens. So there's still work to be done there, but again, more interest, more moves being made. The expansion of the cryptocurrency space and particularly into the hands of institutions getting their investors and their money into cryptocurrency. So the last thing I want to cover then really briefly is that Basic Attention Token was one of the 5 coins that's being considered to be listed on Coinbase. And I talked a previous few videos about what Coinbase was looking for in those cryptocurrencies. And one of the things that I thought obviously was a common denominator was just that interest in these cryptocurrencies. So here we kind of have confirmation of this. So Brave, which is the browser for Basic Attention Token, passes 3 million monthly active users and makes top 10 list in the Play Store in 21 countries. So it is growing pretty rapidly, and it's growing at a pace so far to pass 5 million before the end of 2018. It has also reached the top 10 category in free communication apps for its Android browser in the Google Play Store in the United States, as well as 20 countries across Europe, Asia, and the Americas. There are currently over 18,000 Brave verified publishers, over 4,500 websites, and 13,500 YouTube and Twitch streamers, and last week they received their monthly Basic Attention Token payments as well. So again, this is a thing that is growing, Basic Attention Token for sure. Probably one of the reasons that Coinbase is exploring the listing of this coin on their exchange. Like I said before, I think exchanges are going to go after cryptocurrencies that they think are going to be successful and they think that will end up earning them profit in the future. And then to just cover this tweet really briefly by Charlie Lee. So it says here, there will be at most 21 million Bitcoins in existence. There isn't even enough Bitcoin to go around for every millionaire in the world to own one. So before you buy another coin, LTC included, try to own at least one Bitcoin first. Once you have one Bitcoin, buy all of the other coins that you want. And finally, I wanted to cover this because it relates to potentially having institutional money, potentially a Bitcoin ETF decision. I don't want to say outright that August 10th is going to be the day because I don't necessarily think that's confirmed, and I don't think anybody knows if that's confirmed just yet, but I do want to cover this post that was posted 12 hours ago by T-Kid Schfinkter. Keep an eye out for August 10th. That'll be the day for Bitcoin, he says here. So CBOE may have a good chance of getting the Bitcoin ETF approved by the SEC. The SEC has until August 10th to approve or deny the application. If approved, Q1 of 2019 is when the ETF is expected to launch. Although if that were to be the case, you would probably see an exponential increase in price before Q1 of 2019. The one thing I do want to say is that I don't think it is confirmed by anyone that the SEC has only until August 10th. I think it's kind of roughly around that area, but I don't think that is 100% the deadline. I could be wrong. If you know for sure, if you have actual confirmation that is the case, please bring it to my attention in the comments. But as most of you know, the CBOE is filed to list Bitcoin as an ETF with the SEC. What this means is that Bitcoin will end up accessible to traditional investors and can be purchased on traditional investment platforms. It is very likely, in my opinion, that they will get the AOK from the SEC to list Bitcoin as an ETF. I think it's very possible. I don't think it's very likely, but I think it is more possible than ever, considering the relaxation that the SEC came out with in terms of the requirements for proposed ETFs and regulatory approval, and the fact that the ETFs that are being proposed are getting more and more sophisticated in order to try to get approved. You know, these institutions are coming out with more and more acceptable ETFs to try to get the SEC to approve them. So the individual then says, why do I say this? Let's look at the history. In 2014, the Winklevoss twins tried to file a Bitcoin ETF with the SEC. 2016, we had SolidX that tried to file a Bitcoin ETF. 2017, we had the New York Stock Exchange try the same thing. And in 2017, we also had CBOE launch Bitcoin futures. And in June of this year, we had the CBOE file for a Bitcoin ETF with the SEC, where the ETFs are being offered through the VanEck SolidX Bitcoin Trust, a joint venture between financial firms VanEck and SolidX. So why haven't any of these ETFs seen the light of day? The answer can be explained by this refreshing piece of journalism. In March 2017, the US SEC claimed that the Winklevoss ETF proposal was rejected because Bitcoin as a digital asset was not regulated properly overseas without proper regulatory frameworks in place. The agency also noted there are lax insurance around cryptocurrencies. The regulatory frameworks and insurance have been the two biggest obstacles in the way of SEC approving ETF. Luckily for us, cryptocurrency is a global affair, and we're noticing the more anti-money laundering policies and standards of security. Additionally, Overseas markets like Japan and South Korea arguably have better regulatory frameworks than the US, with Japan leading the G20 in creating an international standard for crypto regulation. Unfortunately for the SEC, crypto is global, and I have no doubt that they are fully aware that slacking on crypto regulation and acceptance equals losing out on billions of dollars, but more importantly, losing global economic leverage. I have no doubt in my mind all countries which are late to the crypto game will find themselves becoming a second world country in a relative sense. There is more to this article, but I'm not going to read through the rest of it here. I will post a link to this as well as everything else discussed in the video. So yeah, feel free to check it out. The rest of this is pretty interesting here. He just makes a point why he believes that cryptocurrency does have a good shot of having an approved ETF, or Bitcoin in particular, in the next month or so. So yeah, I'll post a link to this here. And yeah, feel free to let me know your thoughts in the comments. And if you'd like, give the video a like as well.